Hi everyone, welcome to the 22nd module of GKToday's Banking Awareness course. Today we are going to learn about the instruments of monetary policy of the Reserve Bank of India. Needless to say, this is a very important module and I would like you all to pay attention going forward. I'm Trisha from GK Today and let us begin. What happens when CRR is increased? So CRR stands for what? Here the correct answer is all of the above. So first of all, CRR stands for cash reserve ratio. And the cash reserve ratio is the number of funds that the banks are bound to keep with Reserve Bank of India as a portion of their net demand and time liabilities. This is also a statutory preemption because it draws its legality from the Banking Regulation Act of 1949. The objective of CRR is to ensure the liquidity and solvency of the bank. The CRR is maintained fortnightly on an average basis. Which of the following counts under SLR? So SLR stands for Statutory Liquidity Ratio and the correct answer here is all of the above. The banks and other financial institutions in India have to keep a fraction of their total net time and demand liabilities in the form of liquid assets such as government securities or GSECs, precious metals and other approved securities. This is known as the Statutory Liquidity Ratio or SLR. It is one of the two statutory preemptions because it gets its legal sanction from Section 24(2)(a) of Banking Regulation Act of 1949, which initially mandated for a 23% SLR. Currently, however, the SLR is 19%. What do we call the rate at which the Reserve Bank of India lends money to commercial banks? Now, you have to answer from within the options. I know there are two answers to this technically, but among the given options, the correct answer is repo rate. So, repo rate is the rate at which Reserve Bank of India lends money to commercial banks of India, and it is an important monetary policy tool. The other rate is the bank rate being the long-term interest rate, whereas repo rate is more of a short-term financial tool. Who is the chairperson of the Monetary Policy Committee of India? Correct answer is the RBI governor. The Monetary Policy Committee of India has 6 members, 3 officials of the Reserve Bank of India and 3 external members nominated by the Government of India. And the governor of the RBI is the chairperson ex officio of the committee. What do we call the instruments of monetary policy which directly affect the quantity of money supply? The correct answer is quantitative instruments. Quantitative instruments are those that directly affect the money supply in the economy. The other is the qualitative instrument which have a more indirect impact. So what all comes under quantitative instruments? They are open market operations, liquidity adjustment facility, that is repo and reverse repo rate, marginal standing facility, your SLR, CRR, bank rate, credit ceiling, etc. On the other hand, qualitative instruments have credit rationing, moral suasion, direct action, that is, actions taken by RBI on banks. Which of these is a quantitative instrument of monetary policy? We have just discussed this. Correct answer is all of the above. So repo rate, CRR, SLR all are a part of quantitative instruments. The others being open market operations, marginal standing facility, then there is reverse repo rate, etc. What do we call the funds that the banks keep with RBI as a portion of their net demand and time liabilities? Correct answer is cash reserve ratio. So the direct cash or the fund is cash reserve ratio, whereas if anything in the form of government securities, precious metals, etc. is your statutory liquidity ratio. What is meant by open market operations? Correct answer is purchase and sale of government securities by RBI. Open market operations is used to adjust the rupee liquidity conditions in an economy on a durable basis. This is where the RBI sells government security in order to tighten its grasp on rupee liquidity in the market, and it purchases securities when it wants to increase rupee liquidity and create a surplus cash. What do we call the official interest rate at which RBI provides loans to banking system? Again, there can be two answers, but you have to answer from within these options. Correct answer here is bank rate, which is the official interest rate at which RBI provide loans to banking system, which includes commercial and cooperative banks, development banks, etc. What was the first Narsimham Committee's recommendation regarding the SLR? Correct answer is, it asked them to bring it down from 38.5 to 25%, which happened in 1980s and 1990s. At that time, SLR used to be very high, and the committee recommended that it should be brought down. And the current SLR right now, as of September of this year, is 19%. That's all for this video. Until next time, goodbye and good luck.